Thanks for staying with us. You're welcome back to the morning show here on Arise News. For so long, it was a life and death grapple between the naira and the United States dollar, especially in the highly unregulated parallel market. But not anymore. In an apparent bid to save the rapidly eroding value of the naira, the Tinubu administration floated the local currency. Many analysts have called it a managed float, but some others have countered that a float is a float. But the biggest reality staring everyone in the face is the plight of Nigeria's exports against the backdrop of Nigeria's grossly depleted dollar reserves. It seems to be a return to unfair competition, and the economic outlook on the country's ability to export is looking increasingly dire. For a conversation around this, we're now being joined by Ibidapo Lawal, the founder and CEO of Nigerian Limited, a leading indigenous export firm. Good morning, and good to have you join us on the morning show today. Mr. Lawal, good morning.
Steve.
Okay. Thank you. Thanks for joining us.
Morning. Good morning.
All right. So let's talk naira
You're welcome.
and dollar. Thank you. In relation to the capacity for Nigerians to export goods. First will be to give us your overview of the policies as far as the floating of the naira is, and how you think that this is impacting on our capacity to export.
Thank you so much. The floating of the naira has actually led to rapid devaluation, of the naira in the past few months. And looking at it, that has actually increased, the commodity prices, also the cost of doing business. Basically from, haulage to inspection fees to documentation costs, and even, rentals of warehouses and all sorts. Even typically, people would tell you that the devaluation is actually quite beneficial to the exporters, but that's not necessarily the case. I'll give you a simple scenario. As an export firm, it is logical to take USD loans because your revenues are in dollars. So we have a scenario where we as a firm, we took dollar-denominated loans. I'll say when dollar was about 600, and we did all the conversion of the dollar loans into naira. So let's say we took $1 million loan, converted to 600, and we have the naira sitting in the account at 600 million. But as the currency kept moving, you move from 600, move to 800 or 900, we have a 50% devaluation of the loan we took. So, and we're not able to expend at the time the entire amount on procurement, meaning that if you converted the $1 million today, you're not going to buy the entire $1 million worth of goods instantly. For the unused portion you have, maybe in 1 month, maybe you didn't spend the entire 1 million, and the currency has moved significantly by about 50%, like we've seen in 1.2 to about as high as 1.8, maybe like in the past 2 months. There's a problem. You've actually lost money, even though you're a dollar earning entity. So it's been quite crazy looking at the increased cost and also FX losses on dollar-denominated loans for the exporters.
Okay, I'd like to come in here. I mean, we have touched on it, and we're just talking about it this morning on the morning show before you came on. Of course, I'm talking about the increase in interest rates that was just announced at the meeting with Yemi Cardoso. Now, I want to know exactly what your thoughts on this and how that in itself is going to affect exports and import and exports, especially when we look at the value of the naira against the dollar.
So it's actually going to affect us with the increase in interest rates negatively. Last week, Wednesday, I got a call from one of our bankers that the previous line we had at 20%, the rates have actually been increased to 23, right? And that was on Wednesday. And then last week, Wednesday. Then again this week, just on Thursday, I got another call that, sorry, we need to review the rates upward. The rates have to probably go up to 27%. All our bank lines have been increased. It basically means that, You have lower margins. And if you also look at it, the only way now we're trying to restructure to get, to find a way to get cheaper loans, or you want to go to a Nexim, for instance, to get financing. But even at Nexim, you can get money at 9%. All the loans applications that you have, there's no board at Nexim to actually do the approvals, so that's still pending. So you can't go to a DFI to get cheaper money at the moment, Nexim in particular. So the increase in rates is actually alarming. All our loans today are effectively at 27% from 30%. That means our finance cost has gone up significantly.
Yeah, so I wanted to ask about how the Forex fluctuations have affected your business, because you're focused on export. So I imagine that if you're getting money in dollars, that's better for you, even if the naira is not doing so well. But I'm trying to understand, how has the constant fluctuations of the naira dollar value in the markets, how has it affected your business?
So basically, I would say that the devaluation of the naira is expected to be positive if you manage the situation very well. For us as a business, after we saw the devaluation from 600, maybe roughly 600 in 2022, if I'm right, around that period, and went up significantly to around like maybe 780, 800, we decided as a company not to take dollar-denominated loans anymore. Even though they seem cheaper at about 10%, it looks cheaper, we decided to just take, and just take naira loans. So because of the change in policy by management, that has actually helped us. So now you take a naira loan and then you're paying back in naira. So you avoid currency risk. So that's what we've done. But in the past, the devaluation has actually led to significant losses for the firm on the FX denominated loans. But because of the change in policy, right now, we don't have a currency risk, and that's just naira to naira, or loans to our receivables. We've been able to take advantage of the upside in devaluation.
All right, Mr. Lawal, what are your thoughts on big multinationals crying about how the floating of the naira is affecting their business? I'm sure you've heard of Nestle on the one hand, and on the other hand, MTN lately, reports about 137 billion naira loss, and now it's affecting, investors and everything. Talk to us about, your assessment of that, what you think about it. And secondly, talk to us about the broad spectrum of the exporting business in Nigeria. People will say that, outside of crude, that is our major exporting line, and maybe to an extent, agriculture, cocoa, and things like that, that we do not seem to be doing very well as far as exports is concerned. But you are into exporting. Talk to us about the broad spectrum of where Nigerians are dealing in exporting and how this dollar crunch is affecting business.
So basically, if you look at the companies, I was looking at MTN's financial this morning before I came on this, I came to the studio. It was quite alarming, and I saw Nestle's numbers over the weekend, just during the week. I think maybe these firms, they actually have dollar exposures in an uncertain, economy where you're not certain what's going to happen to the currency. I strongly recommend that firms should not take dollar loans at the moment, or foreign currency loans. The best thing to do, like for us as a firm, we decided to only take naira denominated loans. That way, we've been able to avoid the currency exposure, because it's one of the risks of doing business. So that would be my recommendation to those companies. In the export sector, back to your second question, where you said, looking at the opportunities, I strongly believe that with the devaluation, the export industry is quite more attractive if things are properly managed well. And I think that more needs to be done, by the government to ensure stability. Because even though the rate keeps going up and then you make money on your receivables, also you have increased costs of doing business. You have speculation. The local farmers are going to hike, they're going to try to hoard the products, and then because the prices are moving very fast. So we need some stability in that regard, because that way the industry, and then so that's going to be the way to go.
No, I was actually asking about, you talking to us about the broad spectrum of the exporting lines, businesses that are into exports in Nigeria. What are you into outside of crude, outside of agriculture, like cocoa? Which areas do you think that Nigerians are doing well, which therefore will require some encouragement, and talking to CBN and the government as to showing understanding so that their businesses will not be negatively impacted? So which areas of exports are out there for Nigerians?
Okay, thank you, Steve. So just thinking about it, a huge chunk of our revenue as a firm comes from the solid mineral sector. We basically do the exports of, tin, columbite, tantalite, lead concentrates, and all that. In the agro space also, there's a lot that can be done. People are exporting soya, hibiscus flower, ginger, sesame seed. Those are actually commodities people can export. Another sector that is quite interesting is the recycling space, which we're trying to venture into at the moment, where you can take scraps, smelt, and then add value, and then you can export these to OEM equipment manufacturers, in Europe or Asia. So those are areas that people can look into. For the government, I recommend that some of the incentives, the policies are there, like I rightly said earlier, in terms of like cheaper financing for exporters, which is good, an incentive. You have Nexim, where you can borrow money at 9%. That's fantastic. Then taking money from commercial banks at 27%. But even though Nexim is there, Nexim they've not had a board, a functioning board for like the past 9 months since this administration came in. It basically means all the loans that you can take at 9%, there's a form of incentive to exporters they cannot access. You don't have that you can't draw down on the funds. You can't get approvals in place or disbursements for 9 months. That's very important that the government does something about it. Also in terms of the export expansion grant, which is also another incentive, to exporters, because there's a kind of rebate, incentive you get when you add value to your products. Either, it's semi-manufactured, semi-finished goods, or it's finished goods. There's a rebate system incentive that the government gives. The EEG incentives, they've not been disbursed regularly or as frequent as they should. I think the governments also try and do this, just to encourage investment in that sector. For instance, we have a recycling plant we're building in Ogun State. The total investment is in excess of about 30 billion. That's massive, And one of the reasons why we went ahead to put on that project was because of the RT200 scheme by the previous administration. That got cancelled. So we need consistency in policy. Because then I think they had a 65 naira for every dollar repatriated to the country. And that was one of the things. But, the new administration cancelled that. And you still have some rebates that are still unpaid till date because I have, but we need to have consistent policies, get the loan, the banks to disburse the loans at the cheaper rates for the exporters. Also get the incentives like the EEGs to be, paid on time and things like that. These policies will help. They're already there. There are also tax incentives, like for exporters, that's there. But we just need government to ensure there's efficient administration of these incentives.
Yes. So I want to ask, because I believe one of the items listed that you sell is cocoa. And cocoa just reached, I believe, an all-time high on the New York Stock Exchange just in February of this year. I think cocoa now trades for over $5,000. There's also been reports that cocoa in Nigeria is trading much higher, and some of this is being blamed on climate change, on global warming, but also on probably insecurity and economic conditions. Are there any specific areas, such as cocoa, that you believe the Nigerian government should be focused on expanding and creating a more welcoming environment for exporters and for farmers, exporters such as yourself?
Yeah, thanks, Habi. If you look at it, the government needs to do more, in terms of trying to, number one, educate the farmers on best practices. Like you said, climate change, that's affecting output. And cocoa touched about $6,000 yesterday, 6,200, if I'm right, at around that yesterday. And look at what happened in Kafancha, where you had a roots disease outbreak for ginger, and we had a huge shortfall, of the harvest, and farmers lost a lot of money. I think the government also they need to do their best, in ensuring that these farmers, that's the source of livelihood. And farming is the largest employer of labor in Nigeria, if I'm right. Just think about it, to have, training programs to make sure that the farmers can, they follow best practices to ensure they get the, best out yields from the crops and to minimize losses. Like in Kafancha this year on the ginger, it was a massive outbreak of, I think it was a fungi infection, and the yield has been very, very poor. And we've seen prices of ginger rise significantly from about 1,600 at the beginning to 4,400 yesterday, and the yield has been very, very poor. So these are some of the things we expect the government to do. Just provide trainings, education, and also maybe farm inputs at discounted prices to farmers to be able to increase yields and automatically promote exports.
All right, then I think that will be a good place to end it. Thank you so much for being on the show. Ibidapo Lawal, founder and CEO of Navea Limited. We appreciate your time and analysis on the morning show.